Hi friends, welcome back for Bitcoin Technical Analysis with me, your pal Rocky Outcrop, and I'm going to try and keep things all nice and neat and simple in today's episode for everybody. So, on that basis, what are we going to talk about? Because we already kind of know the score. We've been looking along at this price action here that we've had for the last wee while, and if you were watching the previous videos, then you already know what the crack is, really, essentially. And we've kind of got a couple of things that we're looking at. You know, you've got the 236 down here at 5,450, and you've got this sort of area up here that we've got to try and establish ourselves above, should we want to be trying to make it towards the upside. And the chances of us coming back down here and testing this are fairly high. So we're kind of paying attention to all of that, and should of course we break below that line, and for instance this one here, then of course we could be looking down anywhere down towards the low 4,000s, high 3,000s again. So you know, there's the potential for moves here is still huge, of course, but over the last wee while we've just been consolidating in this little range here. And of course we left the episode off yesterday with a triangle drawn out there like that, and you know, you can do all sorts of magic with triangles, you know, really. But would it be fair to say that we've got something going around here just using these sorts of wicks or whatever? Not particularly. You know, it's not particularly fair. And there's also this big old triangle that I drew on here at the end of yesterday's episode. It's also not particularly fair, you know. But it does tie in with an interesting thing that a really good friend of mine sent me. So if you're looking for good videos to watch on YouTube, by the way, then I highly recommend his channel. He's called TradeSpotting, and a link below in the description to that. Anyhow, what he sent me was a little article that he found on the internet by our pal Nick Chong. Now, Nick Chong is featured on the channel in the past. You might remember Nick Chong. I can't remember what article it was they were talking about. We had we enjoyed his name in the past, and so let's see what our pal Cheech is saying this time. So Bitcoin printed this exact pattern prior to the 2019's explosion to 14 grand, and it's back. Bow, bow, bow. And he talks about this tweet that somebody put up on Twitter. You can see here back in the day of April 1st, 2019. And of course, it's a great time. April the 1st, let me throw a little reminder out there to people that while Nick Chong himself maybe hasn't picked up on it in this particular article, as you know, our pal Chong here, he misses out kind of crucial stuff all the time when he writes articles, as do all of the journalists, so to speak, out there. Anyhow, so anyway, on April Fool's Day, this guy posted a tweeter on Twitter about how Bitcoin, literally a textbook bar bottom. Hint, this means bears are fucked. Well, anyway, it's a great day to post things like that, because what can happen after you post something like this on April the 1st is that maybe you might become Twitter famous, and people look back and say, in this now famous tweet, cryptocurrency tree billies, blah blah blah, remarked to the price action from that there was a literal textbook bottom, and lo and behold, actually it happened, and it was proven right just weeks after he posted the message as Bitcoin began a rally. How great, you know, how great it is to be proven right when you post out your really strong opinion on April Fool's Day. So tip to the wise there, if you've got a global audience nowadays, you know, you can definitely have your cake and eat it if you post on April the 1st. Chong didn't realize that, of course, but anyhow, who cares? The world is also forgotten, and B. Biddles is now an oracle for Bitcoin prices, and everybody should listen to what he has to say. Anyway, this pattern is back, this person is saying, because our pal here, Bitcoin Time Traveler on Twitter, who I assume, I haven't heard of him before, but I assume, of course, he's a rock solid source of information, posted this idea that the pattern is actually forming again. And this was, when did he say? March the 7th. So, you know, that we're looking back a wee bit here in time at March the 7th, and we're talking literally a bump and run, BARR pattern. So literally a textbook bar bottom, right? Literally a textbook, literally. Now you got to ask, when in this post-fact world that we live in, when people say the word literally, do they mean literally? I always assume that they do, and that because how far can we go into this? Maybe in the next few years we'll get to that third post literally world where you can sort of say I'm literally being serious here, and of course be joking, but or mean things figuratively. Anyhow, I thought since this person's being literal and is talking about the textbook and this bar bottom that and having it come back up again, then there we go. That's what you give to the person who's got everything. So here we have our chart in, and we already know all the crack. And if you want to see what any of this means, by the way, just look back. You've got this crab pattern here. You've got this Gartley over here. You've got Fibonacci's. You've got horizontal lines. Everything coming in. We've analysed the SH1T out of this bad boy. I tell you what. So we're kind of fully up to speed. And so what do you get for the person who's got everything? Well, what you do is you take away this line at the bottom here because that's not part of this bar reversal thing, and then you kind of adjust our line here to look like what the person was saying, and then try and see if we can get it to be exactly right and whatnot, and have a wee sort of look-see at what this whole chat is. And what you do is you also get the textbook up, and you know me, I can get you to the right part of the textbook without boring your socks off completely, hopefully, and we can see what the crack is with this whole setup. So like, okay, let's see, this looks kind of like it to begin with, and we're on the 24-hour chart just now, to bear that in mind. And of course this is what we're kind of looking like over here on your man's picture. But we know that this was talking on March the 7th, and of course that was a while ago now, so let's have a look and see. Oops, wrong tab, spoiler alert. So let's see, March the 7th was way back over here. So first off, yeah, that's obviously completely wrong. Let's just make sure I'm saying the right thing here again. What's this chart? 23rd. No, okay, cool. I've read March the 7th wrong. Let's see. CZP's right. I think it's the case. Blue chart which shows Bitcoin's price action. Oh, from March the 7th. Oh God. Right. Cool. Okay. To downtrend, vertical crash, whatever. So from March the 7th, they're talking about. Right. Okay. So from March the 7th. It's good to see that they're specific about when they're talking about it from. So here we go. Price action from March the 7th down to here, and then I can see the chart here has got 23rd there, so you know this is maybe what type of time frame do you reckon this is? It can go from 9:16 to 23, quite like that, down the bottom as you look at it. I wonder what one it is. Has he got it on the 4-hour time frame maybe? Let's have a look and see if this kind of looks like your man's picture. Yeah. So I'm thinking he's maybe got it on the 4. Maybe it's the 12-hour that he's got it on. Is it? Nah, let's go with the 4-hour, right? So he had it on the 4-hour time frame, right? And he'd drawn it in like what? Oh, coming down here, around about that candle, going through the wick of that effort there. So he had it drawn in like that, right? Okay, cool. Nice one. So I think we're kind of set up here to take a little sort of, let's just do a peer review, shall we? We're Cheech's peer, all of us here, us fish on this channel, and you know, since 2013, Nick has shown an interest in Bitcoin, like his primary. I should show more of an interest in keeping that thing charged up or whatever, so it doesn't poop out on me halfway through an episode, or whatever. Anyway, Nick has shown an interest in Bitcoin, good on him, and cryptocurrencies. Cool. I like to see how he separates Bitcoin out from cryptocurrencies in general, because as we already know, being Bitcoin maximalist and all the rest of it, that Bitcoin is money and that fiat is the fake, and it should be like, you know, anyway, whatever. And he's become involved in the industry as a full-time content creator. Well done to Nick. Great, and fantastic. So here we are, and we're talking about whether or not this is a literal bottom. So I have this light bulb here, and you can see, bing, that's what you do. You put it above your head when you've got an idea. Bing, and as you can see, this light bulb is actually broken. So let's just figure out whether or not our idea is also broken or not. Okay, so enough of looking at that crap. Who cares about that? Let's go to the source. Give me your mouth horse. Let's tell us about these bump and run reversal bottoms in chapter 7 of your man Bulkowski, his textbook here. Now, do I personally like Bulkowski? Here's a wee question for you. In terms compared to like Scott Carney, in terms of his writing style, it's much easier to read, and he's much less kind of arrogant when he's talking about things. Even when he talks about how I discovered the bump and run reversal pattern, and you'll often find with these books written by these guys how they discovered them, and they're just like, wow, he discovered them. But you know, there's little things about this bump and run reversal patterns that you know, which is kind of like, I mean, I've read this in the past, but I can't remember where he says it, is see also cup with handle, you know, and rounding bottoms. The thing about this is that he kind of admits it himself. It's basically like a cup with handle, except he kind of like tries to shape it up slightly differently. As you can see over here, he's got his first example of his bump and run reversal pattern is actually, you know, straight up. That's a cup and handle. That's a cup with handle right there, kind of. But you know, it's got an ever so slightly different twist on it. So yeah, let's not call it a cup and handle. Right, anyhow, now he goes on to talk about this an awful lot, right? And you can read all about it in your own time, I suppose. But there's a couple of things that I suppose that we should point out when we talk about literally being a textbook example, you know, literally a textbook example. He didn't use the word "this is like this" or "here I've seen this idea on here," but he said literally. And you can see here that this is the sort of the idea. So when you're talking about literally textbook, now what you do here is you want to be all meme-tastic about things. You take a picture of this and you put it beside your chart like B Diddles back in the day. Here you go. He's got the paper version of the book. I've got the digital version. But you know, you could kind of mash them together with your little photo mash and see if that's correct or not. Now let's just have a look and see, because that's the example he's talking about there. So the first thing that I kind of remember about this thing is that that makes it not true, essentially, is this line here from the textbook. So let's read the literal writing that's here about this literally and see if it tells us anything interesting. The duration of the lead-in should be at least a month, but varies depending on the situation. Well, okay, so at least a month. So the date today is the 20th of March, and it started over here on the 7th of March. So you've got a good solid 2 weeks. So that's half a month, which is literally not a month. It's literally half of a month rather than being literally at least a month. So at least I suppose we know that we're what we're operating with here. But hey, look, I'll be forgiven slightly because it's cryptocurrency that we're talking about, right? Rather than traditional stocks and whatnot. And hey, who knows, you know? Maybe things just happen quicker. There's other little things about this here, like volume is typically high during the start of the three critical parts of the formation: formation start, formation bump, and upward breakout. However, high volume is not a prerequisite. Oh god, right? So that really narrows things down for us. Given that the volume over here is kind of like, you know, what did it say here in the textbook? Volume is typically high during the three critical parts of the formation: formation start, bump start, and upward breakout. Formation start, well, I guess lead in pause is kind of formation start, bump phase, and then and whatever. So, you know, we can go over here and see that, well, yeah, I mean, yeah, you can just ignore, by the way, while we're talking about this, like the inverted head and shoulders and, you know, various other things like the consolidation triangles, pardon me, and whatnot. And let's also just squint slightly and make that make this volume pattern here all apply, because like the volume was high at the start here in the drop off bit. So you know, like we've got that part of it, right? And then this would be the bump part or whatever. And yeah, okay, so we've got higher volume there, and then of course this is whatever the next bit. So there's some higher volume. So let's just say it works, right? Oh god, I'm gonna close that so I don't accidentally hit it again. And then let's take a look here and see that now there's this sort of concept of the bump phase, right? Where you hit this thing and you have a bump, then you go away from it, then you have a throwback to trend line, and then you have the uphill run afterwards, right? And it's called bump and run. Okay, so you've got this uphill run and you've got this bump, and it's bump and run. And here's the picture showing that the price is coming up and bumping here in this bump phase, then coming down, then coming back up and breaking through that line, and then having a run. So let's just have a quick look and see. Oh no, that didn't happen. Instead, it just went straight through. There was no bump there. We came back down to retest it. So maybe this is one of these patterns which is, you know, not textbook or something like that. And no, wait a minute. This is literally textbook. Right. Okay. And then the uphill run thereafter. Now, bump phase, eventually downward pressure abates, allowing the stock to recover. So, like, you know, eventually downward pressure abates, allowing the stock to recover. So, eventually, in our case, was the 12th of March, I guess, maybe about 12th of March up until the 18th of March. We had it, you know, eventually happened in the space of a working week, which is quite nice when eventually is a working week. And then, of course, the volume picks up as prices break out of the formation and move higher. So, you know, the volume didn't pick up; it kind of just sank away. way off as we broke out of the formation, but we are yet to see if things go up a bit higher. Now, if we could just stop maybe taking the PP out of somebody else and instead look towards how maybe this could be a bump and run instead, maybe we need to do a couple of little modifications here or something like that and see if this line was lined up correctly. Maybe we can see, maybe we could, if we had it in more like this and we were less eager about it, maybe we could have said this was the bump, and then we came away, then we had a breakout of it, but we've just been retesting it since. And whatever you want to use about it, maybe that's all true. In which case, you know, you could be looking towards this line here as being your support line, or at least your line that if you break it, you know, you've got a failed pattern on your hands and you're looking for more downside. And maybe that's interesting as well. And I think in the terms of like giving everybody who's already got everything an answer to something, you could be looking over the next wee while and saying, Rocky said is the 5,500 is the next target. Why have we never ever gone there if that were to be the case? And I suppose in a way you could say that, look, essentially you've got this trend line here and we've kind of broken above it, sort of, so to speak, at the minute. And if you wanted to, yes, I know, if you wanted to, right, you could also do simple things like just say, you know, like this here. I know, right? And I know that you could rejig everything, and you could probably do this as well. I know you could, right? I know you could. Or you could take it from here or whatever, and this could be your triangle. I know you could, right? Now, I'm a fan of pattern trading and in that sense, but and I advocate for all this sort of stuff. But obviously, I take everything. I take everything. I take what B. Biddles says. I take what Nick Chong says, and I recommend all of you take what I say with a grain of salt. And it's a good thing to be a fan of salt in those instances. And well, you know, let's just that thing's not going well for me right now. I think I've kind of wrapped up the episode anyhow, really, in terms of what we're looking at. If we go back over to the 24-hour chart and see how this little thing pans out, you know, you can quite clearly see anyway that if you were to be having a bump and run pattern, let's just get rid of that, and you would probably more realistically might want to do on the 24-hour chart, wouldn't you? I mean, come on, Rocky Outcrop Ticians, I reckon you probably would. And you can actually quite easily draw this thing here showing that we're actually still in the bump phase as opposed to the run phase. And where could this literal textbook sort of thing, where do we have it? Where could this, if this is the bump phase, take us down to? Well, it could take us down to here again, you know, and then we could go for this bump and run or whatever. So there you go. There's your grain of salt. There's your sort of interpretation of all the data from my opinion. And I don't know. It's up to you, because I'm not a financial advisor. None of this is financial advice. It's obviously up to you, but how you trade this market. But I don't know. I guess maybe the light bulb idea is on the 4-hour chart is maybe a broken light bulb, but maybe on the bigger chart it's not so much of a broken one, and we're waiting for that bump phase to have actually panned out yet, and for us to go through. Take anything that anybody says, it's called B-diddles with a bit of salt, or Chong, honestly. Right, catch you next time, and thanks so much for joining me. I've really enjoyed making this episode, even though it's really told you nothing. We've just had a bit of a laugh together. Like and share, subscribe, all that jazz. And if you want technical analysis, check out yesterday's video. This is technical analysis, of course it is, but it's 50% satire as well. Sure, why not? Or maybe is it not? Is it, or is it not? It's literally technical analysis, and it's literally satirical. How do we make those two jigsaw pieces fit together? Well, let's find out next episode. I'll catch you later. Thanks very much for joining in, and yeah, see ya.